chat box as we go along when you think of them, so that we don't miss anything, and we'll deal with as many as we possibly can. I'd like to remind you, tomorrow we've got another monthly fund focus webinar, so if you haven't gotten an invite to that, pop me a mail and I'll send you one. We're going to be talking about cautious funds. And then next week's going to be exciting because we're changing to our new research schedule, and we're going to start off next week by discussing the semiconductors. So we're going to be talking about Lam Research, NVIDIA, Intel, etc. Ross is going to take us through that, so something exciting to look forward to. We'll do that next week, but for now we're talking to Marnus, and Marnus is going to take us through his update on Harmony Gold. Thanks, Marnus.
Perfect. Thanks, Harold. Welcome everyone to today's call on Harmony Gold. We will quickly just have as a small summary. We'll look at the gold price movements, the gold price versus dollar index. We'll look at the gold industry, so local miners' relative performance, their geographical revenue, and the all-in sustaining cost of all these miners. We'll have a look at the most recent production update for the full financial year 2025 that was released a week or two ago, and the announcement of MAC Copper purchase, the offer to purchase MAC Copper. In terms of Harmony's intrinsic value and recommendation, the recommendation remains a hold. The intrinsic value increased slightly, and we'll quickly chat about that and give the rationale for that. So gold price performance, you will note that from our last call, the gold price is kind of in a band, with your upper price close to that $3,450 per ounce, and that low end around $3,250 an ounce. With the dotted line there below that, that is your 200-day moving average, and that's almost a great kind of indicator if you can ever get your gold prices there or close underweight or so forth. That is a great indicator where you can have a look at that still at these price or at those prices. Then if we have a look at the gold price versus dollar index, previously what was said about these charts were you kind of had a disconnect. With the chart on the left, you see that the Dixie, which is the dollar index price, moves around between the 105 and 100 point mark. It stayed there, but the gold price in that same period moved from $2,000 upwards, which is a disconnect, because what you'll see the chart on the right is while the Dixie, that your black line moves lower, you find that your gold price moves up because your gold price is in dollar terms. So your price you pay in other currencies while the dollar comes down is at a cheaper price. And for that reason, you would see that there's a opposite movement. And that's kind of now closed the gap. It's all back to the norm and what can be expected. If we just look at the gold producers, previously on the previous call, someone asked us, what about DRD Gold? So this is now included here. It does say at the top that it is a blue, it is brown in this case, but the others are blue. You'd note that Anglo and Gold Fields is now sitting at the top, with DRD Gold in the midpoint, and then Harmony lower. That's all your, let's call it local companies. They're actually not that local producers, which will be seeing the revenue slides shortly. I'm going to jump back to this. I want to explain something here. So Harmony Gold and DRD Gold has a lot of SA exposures, which means their mines are predominantly local. With Goldfields, it's got a little bit of SA exposure, mostly offshore and a bit of Africa, and Anglo Gold Ashanti has got Africa and offshore exposure. Now, if I move back to this, you'll see in April, the Harmony and DRD Gold outperformed. They did quite well. But if you remember, that was at times where, or the period where a lot of the trouble came through with tariffs and so forth. And the Rand also weakened quite a bit during this period. If I put a Rand chart on here, you'd see that the Rand went close to that $20, 20 Rand per dollar's mark. And for that reason, it got SA exposure, what will happen now is you'd see that it's underperforming slightly, and Anglo Gold and Gold Fields is moving in a different direction. And that's just because they're probably producing in countries where their local currency would be more stable against the dollar. Just moving back to this. So that explains why you need to think about your portfolio when you include or decide which one to include. It all depends on your rand exposure that you had or your dollar exposure. If you've got a lot of dollar exposure, you don't want to include a gold company that's got just dollar exposure. You want to do the opposite kind of as well to diversify away. If you look at the all-in sustaining cost of all four those companies, Harmony and Gold, DRD Gold is quite expensive in terms of all-in sustaining cost of operation. Harmony's got a lot of deep mines, and that's why it's quite expensive. But it's all four of them are well below the current gold price. Their cost is around $1,700 per ounce. So what you would see is those margins expanding. Look for that when Harmony releases in a week or two. And that's just because gold prices went up a lot more than the cost to mine. Most recently, the production update that was released. So for the full financial year 2025, production is still expected to be between 1.4 and 1.5 million ounces, as per the previous guidance. All-in sustaining cost that will still be within the guided range of 1.02 to 1.1 million rand per kilogram. And then the underground recovered rates that improve, or grades improved, and surpasses the guided 6.6 grams per ton. Total capital expenditure will be slightly below the guided 10.8 billion rand, and then the full year results expected around the 28th of August. If we just quickly touch on MAC Copper, Harmony made an offer to purchase or acquire 5% of MAC Copper. That was at a price of $12.25 per share. That values the company around $1.03 billion. At the date of the offer, the close, or just before that, the close was $10.15, which then puts a premium on that closing price of 20.7%. You note that if you look at the chart at the moment, it's trading close to that $12.25 per share. And that's just, there's still a few hoops to be jumped through. So there you'll see that there's a premium's closed, but it's not trading at that price just yet. The deal will mostly be funded by a bridge facility underwritten by Citibank, JP Morgan, and Macquarie, plus some cash reserves. And then Harmony does not expect the net debt to EBITDA to go above 1 post the deal, which is great for their debt and liquidity ratios, and then the net cash of 10.8 billion to remain. Just a bit about MAC. It's listed on New York Stock Exchange and on the Australian Stock Exchange. It produced around 41,000 tons of copper in 2024, so all-in sustaining cost of $2.92 per pound, and it's got a 36% operating cash flow margin. So that all-in sustaining cost is also below well below the current price levels received for copper. The mine reserves, it's got just over 12 years of life and exploration upside. So there's still a bit of exploration that can be added to these mines, and they will open up more copper production into the future. And what is the strategic rationale for adding copper? It is a tier 1 jurisdiction mine with high grades of copper. It diversifies the Harmony portfolio a bit away from the gold production primarily, and adds a bit of copper. And it's expected to deliver immediate cash flows. So as soon as it's acquired, it will immediately contribute to the Harmony financials. And then also it adds to the potential to reach that copper guidance or copper target in the next 5 years, and that was with the inclusion of the Eva Copper project. Then, if we quickly have a look at the valuation of Harmony, you can look at the chart below. In the last 10 years, you'd note that Harmony touched that 6 multiple mark about 3 times, and then at the bottom end of it, close to that 2, but a lot of the times a bit more on the 3 side on an EV/EBITDA forward basis. And for that reason, you've got your bear base and bull case, with the bear case at 3 times the multiple, bull case 5, and then base at 4. With the probability of downside being only 10%, base more or less where it is at 65, and that's at a 4 multiple. So your kind of gold price is remaining where it is, slightly lower then. And then at the bull case at 25%, that's a bit more higher up where it is at the moment. Then if you do a weighted intrinsic value, you get to 267 Rand per share. And when these slides were all put together, that had a downside of about 5%. For that reason, it remains a hold recommendation for now. That brings me to an end of my side of the presentation. I'll hand over to Sean now to take you through the technical analysis.
Looks like we lost Sean. Let me see. Okay.
Sorry, I pushed the wrong buttons.
Oh my golly, it's a grey beard. Go for it.
Yeah. Okay, you can see the chart there of Harmony. Obviously, this is until yesterday's close again, but it's trading just above its 20 and 50-day moving averages, and far above its 200-day moving average. So both the medium and the long-term trends remain bullish. In the short term, you can see the share price has pulled back slightly to retest that previous resistance around about that 267 level, which will now act as the new support level. And then obviously that's where minus is our intrinsic value, and hence our holding recommendation. So you can also see the shares been moving sideways in a trendless market, with the upper resistance about 290 and the lower support at about 237 to 230, which is also close to the 200-day moving average. You can also see by the chart here that the candlesticks, the size of the bodies are very small, and you can also see at the bottom the volume's low. So it's a bit of a wait and see, and hence the sideways movement in this in this market. But that's how I see it. The MACD at the bottom there is trading in overbought territory and above its trigger line, with no clear bearish signals yet. So it's a bit of a hold, as Morris would say. Yeah, that's how I see it.
Thanks, Sean. Thanks very much, man. Yeah, this thing's very sideways, so it perfectly fits Marnus's hold recommendation. Those candles are smaller, so it's indicative of a bit of uncertainty. And we just don't know where it's going to go next. But hold recommendation, that's it. If you've got questions, guys, please pop them in the chat for us and we'll have a look at it. Whilst we wait for those questions, I thought I'd throw a poll up here quickly and ask you guys, which stocks do you prefer to purchase to get gold exposure? And I'll put one in there that's not really a minor. So let's see what the answers are. See what you guys prefer. Okay, let's see. Oh, there we go. Goldfields in the lead. Harmony was in the lead with New Gold. Okay, I think there we have it. How many people have voted? Let's see. All the results. I can't see how many people have voted so far, but 10 responses. No.
12.
12, yeah. Okay, yeah. All right, perfect. And the winner is Goldfields. So the audience prefers Goldfields over close to Harmony and very close to New Gold. So taking the operational costs out of it and just doing a pure gold price play, I suppose New Gold's the way to go. Right, let's see if there are any questions in the chat. Which stocks? Okay, that's me, blah, blah, blah. That's it. I don't see any other questions. Guys, if you have any questions you want to ask me outright, Richard says, on a different stock. Richard, they don't farm with or produce gold, mate. Aspen. Let's see. For Aspen, what is happening with the regulatory scrutiny in the US following the FDA warning letter? Now, I don't know off the cuff, and I don't think the analysts who cover the medical part for us is on the call, but I will find out for you, Richard, and I'll pop you a message. I'll get back to you. I don't know off the cuff. Righty. Nothing else. Doesn't look like it. Marnus, thanks for spending time with us. We'll be back next week. We're going to do something new next week. We're going to cover the whole semiconductor sector. We're going to talk about NVIDIA, Lam Research, Intel, and so on. Have a look at the chip makers that make AI possible. And yeah, it's going to be an interesting chat with Ross. So we look forward to hosting you guys next week. Look out for the invite, and we'll see you same place, same time next week. Have a great day. Cheers. Bye-bye.